Good morning, everyone. Microphone check, screen check. That's not working. Let's try this again. There we go. There we go. Now we got the screens working. Wonderful. All right. Welcome, welcome, welcome. Hopefully everyone was able to rest up, get ready for the day ahead and all that fun stuff. As always, before you jump on the left side of the screen there, make sure to read through the live trader morning prep PDF. Very important to go through and understand everything that is inside there. If you aren't a member of SSFTG or a part of the YouTube family, check out the join button below the stream to gain access before our next private webinar, get access to the Discord chat room, not to mention all the awesome stuff like the badges next to your YouTube name and all that. If you're trying to figure out what it is exactly that we're doing here every day, look no further than the Day Trading Academy over on SSFTG, not including the live streams and the YouTube tutorials and everything else that we have got going on. There's 19 plus hours of course material in the Academy, not to mention, everything else. Please keep in mind that the YouTube broadcast does have between a 3 to 10 second delay, depending on where you're logging in from. But if you want to level up to the VIP status, you can enjoy the exclusive permanent access to our non-delayed live analysis stream via Zoom Direct meetings, as well as monthly VIP webinars, private VIP events, one-on-one scheduling access. The list goes on and on and on and on. So whether you're here and you're totally new, or you're a veteran over in the VIP stream, welcome. I'm glad to have you here with me today. So let's take a look at the news, take a look at some charts, see what's going on for today, and then we can start digging in as far as what all is happening. So looking across the board here, one of the big things that stands out, obviously, the market really hasn't done much. If we're looking at the bigger picture, we haven't gone anywhere. The market's still super sideways. There's still a whole lot of consolidation. There's nothing really that's changed a whole lot. Even the settlement price is very close. So there's just really not a whole lot going on. The one big thing that does stand out is the fact that they missed that L1 down here. And the fact that they missed the L1, rallied back up, and broke out to a new high. Again, like we've been talking about, I love the look of the L1, and I think the L1 has a great shot at trying to get some continuation of the upside, but they keep missing it. And eventually, as long as they keep missing it over and over and over again, eventually buyers aren't going to want to buy the pullback because the pullback, it's taken too long. Now they're sitting in too much profit. They don't want to give anything back, and everybody starts jumping ship, and that causes kind of that cascade effect to the downside, which can make things kind of ugly. So we'll see. I mean, the wedge hasn't really changed a whole lot. Nothing has really changed a whole lot on the NASDAQ. The only thing, I mean, maybe we've got something like this going on, but I mean, that's about it. Just have to wait and see if they want to actually do anything. Same thing goes for the S&P, although the S&P did have that nice rally at the end of the day on Friday, lifting the market back up and closing out things nice and strong, going above 4,100 now and continuing further. Unbelievable. As far as this overall movement to the upside goes, we still haven't even come close to an L1 on the S&P. And as things stand, looks kind of like we've got a spike and channel-ish formation going on that they're attempting to break above the highs. Obviously, that creates a situation where they've broken above the highs and failed. Now, the inside retest is going to be the zone of resistance, if selling this kind of market is something that you're up for. Well, play that one with a grain of salt. Over on gold, gold had that really, really nice continuation to the upside. Phenomenal bounce off of L2, and right after the bounce off of L2, it fell flat on its face. It's gone absolutely nowhere. Market's very sideways, super consolidated, and there's just not a whole lot going on right now. So as it stands, we're sort of consolidated. I mean, the buyers are holding support. We're rising. Things are looking pretty good. Maybe the rising support's a little bit wider. That's about all we've got to work with, though. No real change there on gold either. Crude oil, good continuation to the upside, attempting to break out of this consolidation. Although, I mean, we can see if we zoom out just a little bit. It doesn't take much to realize that we are still smack in the middle of a gigantic range. The top of the range in the 62s, the lows of the range seems to be a bit wider from 58 to 57 or so. So the bottom side seems to be a bit wider. Buyers buying lower and lower and lower, but the top side seems to be getting a bit restricted. It's getting narrower and narrower. That could be a sign of bearishness. We'll see. I mean, crude oil is still in a gigantic range. There's not really much to do here. It's attempting to break out of the highs. The assumption is that the breakout fails. Over on the euro, more continuation above that measured move. This was kind of the line in the sand last week where we broke above it, held underneath it as resistance, broke back above it, holding it as support now. It still seems like there's a lot of fight going on in this area. One thing that does help out the fight, if you will, is the fact that we do have some nice rising support, which is also aiding the rally to the upside here. But all things considered, they're still just fighting over that previous measured move up. Getting a little bit stuck, not really a whole lot going on. Maybe we've got a descending wedge that they just broke out of. Could be a couple different ways that we approach it. Over on Bitcoin, Bitcoin obviously had that continuation back to the upside, gigantic rally on Friday, pulled all the way back, and then ripped back up again, and now we're going a bit sideways, consolidated. Hasn't really chosen which way it wants to go, but the one big thing that does stand out, we were talking about in the chat room as well, is the big volume shift over on Binance and how Bitcoin is supporting that volume shift. So it's looking really good for another breakout move above 60K, as long as they keep that going at least. Over on Ethereum, Ethereum is in... It's in a similar situation. I mean, we had that beautiful rally on Friday. It's still going sideways, very reminiscent of what we see, on Bitcoin with this choppy sideways action. Ethereum has 2,000 underneath it, whereas Bitcoin has 60,000 above it, so psych levels are in slightly different locations, but they both look fairly decent. The one concern is that we don't have a big volume shift on Ethereum like we do on Bitcoin, so it might take a little bit more work. Looking at the session so far, I mean, nothing's happened. The Asian session, they didn't even really break out of it. They couldn't even make it to an L1 deviation outside of the Asian session. European session, not really looking a whole lot better. Actually, the entirety of the European session within the Asian session. That is not typically something that we see very frequently. We did have that half deviation move to the downside, which is where buyers are finding some support. Seems like buyers are really aggressive. They're buying low, and they're continuing to drive this thing back to the upside. If we look at the larger time frame, we have not made it to all-time highs yet. It's very close. The one big thing that stands out for NASDAQ that I think a lot of buyers would like, same thing that happened back here, they want to buy low. Nobody wants to buy way up here in hopes that it goes through the top. It might, and if it does, it'll probably keep going. That's great, fine and dandy, cool, but nobody really wants to buy way the heck up here. So a lot of buyers are going to be waiting for a pullback. The next logical pullback below the previous low of day, below the previous day before that, because they're so close together, those become major zooms of interest. So, any Zoom streams today? Yeah, that link is in, if you go to SSFTG and click on the VIP zone in the top, I believe it's on the left of the logo. That link was updated. I updated it late this morning, so if you clicked it and it didn't work this morning, it's not that you're going crazy. That was totally my fault. So I don't even think I updated the date. I think I just updated the link. So just keep that in mind. It was a last minute, like, crap, forgot the link, throw it in there kind of thing. Oh boy, this looks... What the heck? Kicking a can, hang on. Too much caffeine. Wow, this looks phenomenal. We've got the opening close is further solidifying how gross it is up here. We've got a lot of back and forth. This is an absolute mess. We haven't really gotten one way or the other. The big thing that stands out, obviously, that twin reversal off the lows. We knew that was coming. They haven't done anything since then. Nice flush back down there. Maybe. I don't know. 60 minutes, a little bit of a cause for concern, though. We'll see if this open has anything extra. Anything to help it out, maybe, or something. I see my son was playing Plants vs. Zombies. Nice. I didn't realize they had a, totally off topic. I didn't realize they had a first-person shooter version of Plants vs. Zombies. That was kind of cool. There's no, like, blood. It's just, zombies shooting plants. It's pretty straightforward stuff. little bit easier to justify my son playing something like that than like Call of Duty, you know? Man, there is nothing going on right now. Very, very slow open. If we look at the volume, I mean, that's the telltale right there. The NASDAQ volume isn't even over 100K. It's at 81. The euro has more volume than the NASDAQ right now. The S&P is only at 150,000. Crude oil's at 150,000, 143. So, I mean, crude oil is trading almost more volume than the S&P. That goes to show you how little has happened so far this morning. Fingers crossed, that's a good thing for the U.S. session. So, you know, hopefully the U.S. session kicks off and everybody's like, hey, nothing happened yet. There's plenty of time. I wish the news calendar had a little bit more on there, i.e., something. The news calendar has nothing but small and medium news announcements, and those don't even start until 11:30. So, a little bit dry docked on that side. There's not a whole lot that we can do there. Got 15 minutes until the open. As far as the S&P on the faster 5-minute ETH time frame, we can see they are deeper pullbacks. There's still not a whole lot going on. Give me 1 second here. I will be right back. Actually, does my be right back thing? Hang on a sec. I'm gonna mess with my my stream thing because I want to see if I can get the live screen to work. Hold on. think it worked out. Worked out better than I thought it would. All right. I am back. Sorry about that. Let's see what these bad boys want to do. Well, I mean, if anything, fingers crossed. Got about 10 minutes until the open right around the corner. S&P pulling back off the highs. Not exactly a huge surprise there. More recently, every time there has been a high press, there's been 2 failures. So if you look at repetition on the S&P, they tried the first time, dumped, came back, dumped again. This time around, they came up, failed, came back up, dumped again on the second time. Came up, failed, up again, dumped. Right, same thing. We've got the singular move over here. Whoa, that's fun. First, second, failure. Now we've got first, second, I'm starting to think failure. So S&P, although awkward timing and you would have to be going short, which has its own set of problems. There's a possible short on the S&P. Not a big cup of tea for me, though. Not much else going on so far. Gold catching a bit more bearishness to the downside. Honestly, gold could be very interesting around 38.9 for sellers to re-enter short on kind of an entry defense from the first move down. Got that nice bear rejection, bear confirmation, sellers looking for a re-entry. That would be the short area on gold around like 39 or just ahead of it maybe. $38.9. Market's just kind of hanging here. Piper, what are you doing? My dog's trying to nest in this blanket. Try not to break my office pipe. Jeez. So shorts on the S&P, I mean, it does make sense from a repetitious standpoint. The timing, super awkward with like 6.5 minutes to go until the open. But, I mean, there is a short. Honestly, if I were going to sell anything, I would rather it back up on itself, though. play the vindictive, but I mean, it makes way more sense in this kind of market to try to sell a bit further up if I'm going to have to short the S&P. So I'll go with the assumption that the sellers will be able to complete their leg. That's fine. I'll go with that. It seems like they'll be able to, at least based on repetition. But I'm not going to go on the assumption that they're going to be able to do it in one move. I think they're going to have to back up on themselves. If they do just drop and we start seeing it down in like the 1350s, then I missed it. On the NASDAQ side of things, we don't really have any cycles to go with, per se. Man, we haven't broken a low or a high, so it doesn't really matter which way we go, I guess. Sellers are trying to hold an L5 off the top, and if we go from the bottom, they're trying to hold an L5 off the bottom too. So it's just a big L5 slugfest. Did the S&P hit my entry and I didn't get filled? Did that happen right there? Typical. All right, well, I didn't get it. I tried, but I didn't get it. I don't know if it hit my entry or not. I knew it was one tick away, but I didn't actually see it go. Well, whatever. Doesn't matter. Now, looking at the potential continuation from a repetitious standpoint, with the assumption that they will be able to complete a secondary leg down. The last one was 0.1%. The one after that was 0.12. Realistically, it would make a lot of sense that we would see it seems to be going up by 2s. So either we see another 0.12, 0.1, something like that, which would be back down to like the 1275s, or we see it add another 2 and go 0.14, which, you know, under normal circumstances wouldn't really matter. But if you look at what a 0.14 means in this case, it's the measurement of the lows of that big giant brick bottom bull bar. It's the double bottom retest of that. There's a lot of things that stack up there. So, man, I gotta say, this area down here at 11.25 on the open volatility, if they can slide with another extra 0.02, that's a great spot. That looks really nice. So I missed the short opportunity, which is a bit of a bummer, but let's see if they can get a bit more continuation down. The link in the VIP zone. Yeah, I updated the link really late. I mean, like at 9 o'clock. So I didn't even update the date. I don't even think the date's right. I think it says the old date. But the actual link itself is correct. It was one of those things where I totally forgot to do it this morning, or all of over the weekend, and quickly rushed and threw the link in there. So the date's wrong, but it is correct. It'll work. Hey, how's it going? Welcome. Got the open right around the corner here in about 3-ish minutes, 2.5 minutes. Waiting for a deeper dip on the S&P, preferably down to the 11.25. That would be a much more interesting area. And I would love to see if we can get that extra 0.02 on the ES down to 11.25. Gold still interesting at around 38.9, but from a 15-minute perspective, and that would be a retest of the earlier entry point for the bears at 38.9. That still hasn't happened, though. 928 hits. Whoo, Lord. Whoa. All right, 928. We've got some volume. Jeez. All right, I gotta move this over just so I can see. There we go. No, there weren't any morning brief levels either. I was running super behind this morning. I didn't have a chance to do anything. I woke up like 5 minutes before I had to pack the kids up and and bring them to the sitter. So this morning was an absolute train wreck for me. So, I mean, luckily, as far as the indexes go, the change on the NASDAQ as far as the settlements really hasn't changed much. So there's not going to be a huge difference, fortunately, today. But no, I was just totally behind the 8 ball this morning. $30 seconds or so to go until the open right around the corner. Still waiting for that S&P dip a little lower down to the 11 quarters. A couple different objectives could take place off of this as well. If we're looking at the previous swing, then, I mean, realistically, if they just hit it and bounce straight back up again, there's nothing necessarily stopping a move back up to like, not necessarily just 1250s, but like 1375s, start getting into the 15s. Now we're talking like 2 or 3 to 1s back up to the high closes. All of those areas make sense. It just depends on how supported this zone comes into at the open. Or if it just rips right through it. That's the risk you take trading into the open. So I would love to see the 0.14 pullback. Bears still trying to pressure a little bit further down on the NASDAQ, and they're getting close. If we look at the overall volume from the top to the bottom, oof, man, these lows are gnarly. Whoa. There's a decent chunk of volume on that low, too. You can see it crept up. Okay. Be kind of interesting to see if they still defend this after the open hits. We haven't gotten a move down on... Oh, man, the S&P. 11 quarter is what I'm waiting for, and they got down to 12. That's not nice. We do have some fairly distinct accumulation volume to the downside. POC is still downweighted 786.75 with price underneath it. That's not great. Buyers need to see this rotate back up again. We still have 3 minutes left just on the first 5. Hang on 1 second here. Get the first 5 volume built in. NASDAQ continuing to push a little bit lower. See if that can drag the S&P down a little bit further. Maybe I'm just being hopeful. Getting a little bit of support. Man. Gold never backed up either. Alright, I'm running behind. Let's see. Morning. Hey, everyone. How's it going? Hey, people. Thanks. It's working now. Is this a simulation? Is the world? That's a big question lately, isn't it? If you're talking about the trading account, regardless of whether or not you can see my account numbers or not, you can refer back to the morning prep PDF that we talk about at the beginning of the day. I will always tell everyone to always assume, and I don't care if you can see my account or not, that I'm in sim, because what I'm doing on my account is absolutely irrelevant to what you're doing on your account. Strong bullishness back to the upside. If you need to read through the morning prep PDF, though, we cover it every morning when we start it up. You'll be able to read through it if you back up the live today as well, to the beginning of the day. Very nice bullish continuation back to the upside. Oof. A little bit of a push back down again. Which way are they going? We are back above that low-weighted POC at 786.75. That's a great sign for buyers to try to kick this back up. But now we have to see them respond at this area. Whoa, wow, okay, geez. Respond they did. The first dip down here, now see if they test it. They flushed underneath the POC. Buyers have not been able to take it back up yet. This is a big fight point. Closed above it. Look how much volume is transacting around 786.75. A metric ton. More bullish responsiveness. The only problem that they're running into right now is the Euro session lows at 93.50. That's causing a very big problem. S&P, man. All right, well, I tried. What did they end up going down? 0.12. Yeah, okay. Fine. Bears pushing back to the downside again on the NASDAQ. Heavy bear rotation back lower and now back below the POC. Buyers could be on the back foot here. Let's see how much they fight over this low. They stopped this thing dead in its tracks at 76.25. 3 times. Another very strong bull bar, but they're retesting volume from the underside, and it's growing. A bear bar here will get sellers involved to try to at least attempt a breakdown. It's got to be decent, though. Nope, right back above it. Okay, so that's a great sign for buyers if they start showing support at 86. See how it immediately dropped through it? Now the POC went lower. What a fight at the open. Holy crap. Oh, man. They shifted the POC lower at 785, and another strong bull bar could be all it takes to try to rocket this thing out. It could also be the last trap before the sellers rip the bottom off of this. Big volume shifting now. Price went underneath it with a big volume shift. If they can back off back to the 785s, that's where sellers are trying to get out. It seems like buyers don't want it anymore. Looking for shorts off of that volume cluster with that assumption, but if it pops back above it, it's going to be a clean and obvious decision that's been made. Bull bar closing back above, and sellers breaking higher. No thanks. Or buyers breaking higher, whatever. So sellers tried to get the breakdown, and the reason why I like that area is because the risk reward is phenomenal. If they do hold that 785 and we get the breakdown, I mean, you can see the risk. Look at the risk reward on this. It's insane. They didn't do it. At least not yet. Another bear bar down might be the attempt, but now they've closed back above the POC. It's going to be a lot harder for the sellers to make this happen. I'm much more interested on the long side now if we start seeing volume building there at the 85s, and they hold. It's got to be sustained volume. There we go. They're going to need some powerhouse moves to challenge this European session low. On gold, I'm no excuse me. On gold, I'm no longer interested in the short. It's gone too far. Nice continuation back above. This is the first attempt at reversing higher. It's usually not successful, or if it is, it usually goes 3 small legs higher. Is your POC based on the opening cash market? Mine appears to be different than yours at times. It could be, depending on how you're drawing it as well. Because I'm using a tick chart, it's sort of a non-defined opening price if you understand how tick charts work. Like this is at 4:06:08.941. You know, like what kind of crazy start time is that? So that will definitely throw things off a little bit, sure. I mean, even one tick or one candle off on a tick chart can be a pretty big difference. We've got more bullish continuation to the upside. S&P is also furthering the movement. Sellers who were trying to get the move going and didn't exit when they saw the warning signs on the volume shift, well, they're stuck now. And those are the traders that I want to pay attention to at the moment. So those shorts have been from this low trying to get this going. Jeez, look at that POC down there at 785. Yep. All the warning signs were there. Yeah, if you're, especially it will be noticeable on a 1 minute time frame versus a tick time frame. The difference between tick and time can be drastic. Inside of the European session low, whoa, big washout on the NASDAQ. That might be good enough for buyers to jump back in on this. I would like to see it dip back down to like 96 though. That would be a significantly more interesting price. 96 down to the euro lows. The point of interest here would be looking for this zone to hold without breaking down much further through like the 790s with an upside objective rotation back up towards potentially the highs. Still lower probability, but there's definitely a lot of backing to a move. The only consideration here is that we could get a deeper pullback to retest this 85. So with that in mind, I'm actually going to reduce just a little bit and challenge only one. Now, a strong bull bar back up will get scalpers above this bull bar. They'll be looking for continuation and a break above the short-term high. It's forcing them to buy really far up. S&P 18 quarter was the close of that last candle. I wouldn't mind seeing a 1-point pullback for scalpers to try to pull back on this move for a scalp move back up. All right. 12 quarter to 18 quarter is the objective. Secondary point of interest now a bit lower down, 1675. Buyers also backfill into this move. So far, they've challenged down towards the 789s. As far as a continuation move back up, that puts a 2-to-1 above the highs, but I'm keeping the risk light with maintaining a lot smaller contract size. Because, again, this could slide down to the 785. And that's going to be the point of interest. If I don't see any volume build at the 785, I'm okay. Well, really? Wow. All right. Well, I had no time to respond to that. Absolutely zero. So there's nothing I could do about that one. Jeez, oh Pete. Well, I couldn't respond to that, so I'm just going to have to use it as actual risk. That leaves a 1-to-1 objective at 807. A 2-to-1 objective is going to be through the highs up to 18. And that's all I have to work with right now. I couldn't respond. It was so fast. Maybe another attempt. Now they're holding higher low. Now they're holding higher low. The sellers do not want that bull bar to trigger. If that triggers, it's game over. They can't get their fill at 85. It hit. Uh-oh. If the buyers start continuing above these kind of candles, that's where you get the FOMO traders in. I mean, I don't have a reason to do anything right now. It's already skipped me on on that first move down. All right, here come the FOMO traders. This is also a drive back up to the original break-even point from that earlier slide. Seems like there is a bit of a response at break-even. S&P 1775. I don't know if it poked it. This thing's moving so fast right now. NASDAQ trying to get that last, like, come on, 85. Give me the value dip. Is there enough volume to vindict a quick move down there? Or are they going to lose their grip? They're losing their grip. Out on the S&P. NASDAQ rotating back to the upside. If we start cracking above these 799s, 800s, I would prefer to see it go sooner than later at that point in time. So far, they're just fiddling. Big bear bar to the downside. And a lot of volume stepped up on that quick pop. Do you see that right there at 92.50? Any buyers who might have been in a little too large might be reducing size here. Still interested to see a response at 85. Potentially seeing a little bit of a shift. Not necessarily for a full-blown downtrend, but potentially for them to spike lower than just 85. Unless the bulls show up to the party soon. Tapped break even and immediately rejected. That's a clue. Some buyers who are built in a little too large, again, they'll take that as a warning sign. They don't want to see the low of this bull bar break, these swing lows break. That could potentially cause a cascade move down to those 85s, which might be what buyers hope, but not even enough to get that going? Okay, a rejection back up again. Now this time it ripped right through 85. So buyers who are accumulating, that's fine, right? If there were a lot of orders there, so many stops getting hit will flush through those orders. That's okay, that will happen. But now we need to see it get supported, right? Strong bull close, strong pop back up, strong continuation drive. This is where buyers need to step up to the party. I would rather keep the risk low just given the way that this is moving. Retesting 85. Pushing back up again. Chopping through 85 a little bit. Back up above it. You can see where the fight is. Back through, no thanks. I'm not interested. I already kept the risk light with one. I'm not going to go catatonic by building into a move that has a potential to blow off the low. S&P, totally unbelievable for sellers to break down below this bear bar and actually take it anywhere. So with that in mind, I like that zone at 1550. But as far as repetition goes, right, this is where we've got to be a little bit cautious. Because these are the bulls trying to get this break to the upside. What happened to my first five? My first five volume just disappeared. It's way down here. Okay. Well, that helps a lot. I was gonna say if the volume was top weighted, that would be even better, but it's not. So 1550. Have to be a little bit lower then. I'm okay with it down back to the volume support. Sellers back down to 85 again. This is the challenge point. Still a big old fist fight going on here. Honestly, slight modification. I would rather buy the low of that bull bar in the S&P than the bear bar. Okay, another bull bar back up. We're still heavily in a range. So the first time that we actually do break up or break down away from this, that's going to be a big zone of interest for buyers or sellers. I mean, whichever way it goes, to try to accumulate into the move. That would be the first actual break that we've got in a long time. Have we even gotten out of the Asian session? Not really. Not breaking a new low, but breaking through volume at 85. Could be a potential clue that sellers will be looking for a continuation move back down. Could also just be a giant trap on the low. S&P testing 15 quarter, but no fill. There we go. 15 quarter finally hits. Objective is just for scalpers on the S&P so far, 16 quarter. But as they back off, we've got the volume node below. I'm going to play it a little closer to the chest on the scalp side, though, on the S&P. Around 15 quarter will be the objective. We still have that huge volume node underneath. Oh, testing 13 quarter, but I didn't get any. S&P breaking down pretty aggressively here. We've got a double bottom on the low at 12. Whoops, that's not the market I wanted. I wanted the S&P. I didn't mean to go short on the NASDAQ. So looking for 1150 for a marginal exit. But if they dive a little, well, man, we are getting a phenomenal dip here into a major zone of support from a range perspective. I might just have to rock the boat on the S&P. I like this zone down here as a potential buyer. But at the same time, I'll also be looking to utilize additional contracts down here to draw my average down to reduce size from the original, because that was obviously a failure. So the original was 4, and that's where I'll drop those. At 10.5-ish. Might just have to take the hit. Jeez. S&P, that's not very nice. I'm still looking at 10.5, but now it doesn't even look like that's a viable point of interest. I'm going to have to drop the original ones. I've got to get out of those. As far as the 10.5 zone, as far as the bounce earlier, so the original point of interest was a total failure. The secondary bounce that I'm looking for is off of the range lows, and that risk parameter is quite a bit higher. That gives down to 7.5, 7 quarter-ish. Although if they're going to trap a low, that would also be a fairly large one. But if buyers are going to bounce back up off of this, we should see a response at least back up to the 12s, preferably a little bit further up towards that volume node. So the first objective is going to be 12. The second one's way up at the top. That's a 2-1. We'll see if they can rotate that far. So I had to hit the E-brakes on the original entry. It happens. Welcome to scalping on the wrong side. But from the swing side, looking at the lows, I like the base at around 10.5 for a continuation back up. Larger objective would be up to 17, which would be the 2-1. And the breaks would be around the 7s or so. You really wouldn't want to see it dip much underneath that. Kind of curious to see what they respond as at 13 as well. Big break point as far as the earlier consolidation. And if we look at it from the top, from the highs, this was, again, that really obvious accumulation volume. We saw the volume shift right there in the 785s, and now it's just been a complete dump fest. So that shift right there, all of those buyers are assumably still potentially stuck, even though we did see a lot of volume. What was that node right there at 786 or so? There's a lot of volume that built up in the 786s, so we know a lot of longs got out, but potentially not all of them. And this slide down, given that there was a VVP a little bit lower, would also suggest that we've hit some stops. It's got a bit of a stop run, and now longs are getting squeezed. So this could just be the start of a continuation to the downside for sellers on the NASDAQ. The S&P hasn't invalidated any of that support. They're still holding on. Although if the NASDAQ pulls down too aggressively, that will obviously impact the S&P. Giant noted volume at 17 as well. Actually, that makes a lot more sense than to target the 15 quarters. Okay. It's about a 1.5 to 1 instead, which is still favorable here. Final one at 17. NASDAQ sellers, if they're given a strong enough bear bar, will look for a continuation, but given the bigger location where we are, if we zoom out a bit further here, we can see that this is also a retest of a major previous swing high, and that was kind of that choppy, weird trend shift. You remember that one? It took forever, and it finally got going into the afternoon. We're kind of back to retest that, so this is a challenging spot. Sellers have really good continuation down. A retest of the 53 halves or so will find shorts looking for a re-entry back down. Looking for a continuation push back down to the 45s, potentially lower. Originally, it was a nice weak bull bar, but now chopping above the highs. Nice flush back down. Immediately picked right back up again, though. Jeez, NASDAQ. All right, fine. I will sit on the sidelines. I'll let the S&P do its thing. NASDAQ isn't ready for me to play ball. I get it. Okay, fine. I've made a decision to not short the NASDAQ. Yeah, seriously. I feel like just go to the micro, wait for the big major swings, and then just buy one. And if it takes a little bit longer, buy another one at the next major swing, and just keep accumulating them all. It's insane how strong those larger swings are on unlike the big ones. It's just when it gets down to it, it flushes down so fast that you either have no chance to respond or you just have a pending limit order waiting there. Now, another thing to keep in mind as well, I know last week it was those V reversals that nobody could escape out of, right? If you were on the wrong side of it, it just annihilated you. There was no chance to get out. And, this week, there may be some traders who are a bit gun shy coming into this week, but it is also a new week. you never know. After a weekend, sometimes a lot of traders will come in with a slightly different mentality. I think the big thing that stands out right now is just the consolidation on the 60-minute chart is just horrendous. It's nuts. That blows me away, how consolidated this is. If we can get a nice dip down, longs will be all over it. But it just slides down so far. Retesting settlement from the backside. S&P objectives at the moment looking for the 1.5 to 1 or so at around 15.25. Although we do have that first 5 volume node, which is going to be coming into play at around 13. Gold with a big punch to the downside. Would you say the S&P is more forgiving than the NASDAQ? I don't think forgiving is a term that I would ever use on any market at any time, ever. That's not what markets are about. They are anything but forgiving. They're brutal. I understand what you're asking. I think the S&P is in a way because it's slower generally. It gives you more time to think about things. That could also be a really bad thing, but it gives you more time to respond. It gives you more time to think about the situation. It's more forgiving in that sense, yes. Is it more forgiving in that you're going to get stopped out less? No. No, you're going to get your face ripped off regardless of what market you pick. It doesn't matter. There are going to be those days. It's just part of trading. Attempting to break above volume at 13 was looking like they had a pretty good shot at it. Oh, there we go. I would use the word fluid over forgiving. I would agree. I think that's a better term. Would be fluidity, yeah. There are things as too much, though, like the bonds. For me, that's too much. Like, I can't do that. $1.5 to 1 objectives at 15.25. It's obviously hovering right around that point. Likely, though, we'll see it migrate back up towards the 17 volume, so a 15.25 target is still should be easily safe, even if it does challenge it a little bit. NASDAQ continuing. There's your V reversal. Jeez. Now, if we look at it from a very, very micro sense, right from the bottom, looking at the first pullback, they have an L4 pullback that rotated up into a new high, L4 into an L2, which broke higher. So likely, from a very, very short-term perspective, we're looking for L1, L2 buyers. Those are the buyers who are going to be looking for a continuation move off of this base if we are trying to pick up a V bottom. So we'll see if we can get them to back off into those L1s. From a pattern structural perspective, that's the zone that they should be picking it up. Keep in mind, this is also a retest of the earlier short entry. That's going to make this area exceptionally difficult. Like, to the tick. It's not just close. This is to the tick. So I would prefer to see the buyers go above this. That would be nice. You know, but we'll see. Ah, that explains the resistance there. Gotcha. So I'm going to drop those two early. The reason being, this is a 2-to-1 off of the actual risk. If the market's going to pull back, this is one of the most likely places that it's going to do it from. I'm okay dropping two of them, but trying to leave this one to go with the assumption that they may pull all the way back to break even. That would be a reload opportunity. The wider objective is still based on this larger swing down here, and that would be a 2-to-1 back up to the volume node at 17, which is awkward, but you know, we'll see what they want to do here. I think it makes a lot of sense to lighten the load a bit given the location and the fact that we're seeing a metric ton of volume building here. Not willing to give up on the whole thing, though. We are breaking above that point of interest. Now, this is where we really want to pay attention to it because we've broken above it. Put yourself in the shoes of the shorts who are here. If you were short here and it was all this move down, you've got like one contract left, right? Comes all the way back up, pops above. What do you think you're going to do when it goes back down? Your stop's going to go to break even real fast. Chances are you're not going to let it pull back on you. So as soon as this starts going in their favor, it's kind of game over. They're not going to let it go again. Nice bear bar off the top. The sellers need to keep this down. VWAP at 88 and the high of the 1 minute opening range. This is, I mean, you know, this is the area where if they're going to hold that type of failed V bottom, right? We see those on occasion too, especially with the NASDAQ, since it always has V bottoms, where it goes like, nope, just kidding. And then it gets absolutely annihilated, right? That's kind of the concern right now, because a lot of times when that happens, they'll be holding L4s, L5s. And, you know, we're sitting on an L3, which is an indecision point. If we look at the bigger picture down, we're hovering right around an L3. But guess what's above an L3, right? An L4. And that would be right at the top of all of that resistance, back to the cluster of volume. This is really shaky ground right now. It's looking great for the buyers, but if they lose their ground too much, it's game over. Side note, I can't believe I'm buying the S&P at 4,100s. What? What world is this? This is insane. Unbelievable what the S&P's done over the past few weeks. Few days even. The number always gets bigger too. Yeah, it's insane. All right, I always kind of joke about it where I don't look at the Dow a whole lot, and I took a break from it for months, obviously. Last time I saw it was like 27, 28, going into 29, and I look at it again, it was at 31. I'm like, wow, I missed a big one. Just totally avoided that one. Incredible how fast these things move. But we know the January effect. As long as January closes bullish, which it did, almost, well, not, you can't say always, but very frequently that means the rest of the year closes out bullish as well. To me, that tells me that anything below January is BTFD. So, I don't know, we'll see. This market's been insanely bullish. S&P pullback likely will be challenging a break-even of sorts. Man, I'm not a huge fan of the way that the NASDAQ is playing games around this 87 area. I would really like this to go just a bit further. Okay, well, there you go. So now if we can get a quick L1 pullback, those quick little snapbacks, especially after the market's broken a level of resistance, become very favorable. So buyers will be looking for this first dip back down into the 85 quarters. assuming that the market can stay high, right? This is an attempt at a V-bottom reversal off of the lows. Buyers want to see higher highs, higher lows, L1s, 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 over and over and over again. And if the L1 fails, the next zone of interest is the L2. So we've got some backup, right? There's some definitive zones of interest for the V-bottom buyers to try to keep this going. But if they crack too aggressively through L1s, and I'm not going to be interested in L2s, right? We're dealing with a really touchy zone. We've got to be kind of quick. Getting into the L1 pullback zone. S&P is going to be closing out a really nice bull bar here. NASDAQ immediately supported at 85 quarter. Okay. Nice secondary push down. L1 buyers so far defending. Still dealing with super herky-jerky back and forth stuff here, but I'm going to reduce a little bit here back around those break-evens with that big bear bar down, just to play it on the side of caution. I do still love the bull side, but if they're going to dip down to the L2, I would rather have some ammo. S&P still hasn't had their vindictive break-even test yet. They still have to get that. Well, howdy ho there, bulls. Let's see if we can get back up to the 93s or so. That's going to be the first objective, and that would be hovering right around like a 2-to-1-ish, although it did slide the low of the L1 a bit. Might mean it's a bit more favorable to look for like 92. Yeah, all right. And now we'll see if they can keep it going from here. Now, they may try to get one more vindictive quick look. They never broke the top, and the only reason why I'm watching this area in that sense is because with that failure on the break of the highs, they love getting quick little snapbacks to take break-evens. And we still know that the context of this is very bullish. We've got that attempt through break-even. No response back up. All right. So in that case, I gave away 5, 6, 7 ticks just to see if they were trying to play games with that area. I'm okay with that. That's fine. Looks like they were still playing games in that area, which is still, you know. L2 is the next zone of interest for a wider pullback. Seeing bulls still trying to get that L1. Look at the price they're rejecting too. I mean, it's no coincidence why they're failing here. 787 is the earlier short interest. They're trying to push this back down. If these guys give up, if these shorts give up, it's game over. But right now, they're the brick wall. $787. Fittingly enough. If we do get another continuation back up, usually after these dirty L1s where they're still trying to figure it out, and again, we know why it's dirty. They're fighting over this area. The next one's usually a lot cleaner and will only pull back to the top of it. So we can be a bit more strict in terms of risk. Yeah, the ES consolidation isn't helping, that's for sure. Oh, man, that bull bar back up. I really wish we weren't fighting over this level specifically. If this were somewhere else, it would be a lot nicer. It's also at the European session lows. If we wanted to add more fuel to that fire. Ooh, bull's showing back up pretty aggressively here. I tried picking up the bid, but I couldn't get it. All right. Well, so much for that one. They juked me out of the low, and I tried picking it back up again, but it was just gone. Left the station. No fill. All right, but the next pullback is usually a lot cleaner, so I'm still okay with the next L1 pullback. We're back above the European session lows, and more importantly, we're invalidating the shorts. That's what needed to happen to kind of clear the way. There we go. I know the NASDAQ loves those quick little flushes. S&P still looking solid. And I feel like here I am again on the NASDAQ waiting for a pullback. Round 700. Decent trend line, or descent trend line across the top of the NASDAQ, lining up with the value area highs. Yep. And the overall movement that we've got going on in the bigger picture, obviously, there's just... This looks like a phenomenal TUL2, right? Textbook. We've got a really strong reversal off of the lows, more continuation, than we've got the L1s. They start pulling back a little bit lower, two-legged pullback to an L2. continuation back up. I mean, it's lining up the way that you would expect it to. If we measure it up, we had a deep move into the L3, still indecision, more continuation back up. Then we've got the L1, more continuation, L1, more continuation. Now we're starting to dive back into the L2s, L3s. This is the value pullback. So buyers who are looking for continuation, that's the spot right underneath that swing low. Perfect. But remember, whenever we break those previous swing lows like that, sometimes they will back flush. It doesn't always hold high or low. Right now, I'm trying to look for something like this. Actually, it would be, we've got that really nice reversal off the lows, but it would be more like a lightning bolt type continuation, right? I want to see this keep going up with the assumption that it will probably get one of those later. Still waiting for the S&P. Beautiful bull bar back up. Oh yeah, for sure. I mean, it's a very, very obvious long. I got whipped out of it. I mean, they ran the low. What a shock. They ran the low a lot further than I would have expected them to. I think I say that every morning. Don't ever assume the NASDAQ's going to do anything, but well, whatever. I expected it. It went further than I thought it was going to. You know, eat my own words kind of thing. You're not alone. Still plenty of time left in the day for the continuation, though. Because remember, a V bottom, that would imply that this day is going to end up closing bullish, right? So, well, if we can get that kind of move on the daily, seeing another bull bar back up, on the NASDAQ especially, you could easily see this going to all-time highs. You were looking at 48 but couldn't pull the trigger? Oh, yeah. It's all good. At least you can pat yourself on the back. You know your analysis was solid. Bulls still looking for continuation back up. Haven't had that nice, clean, two-legged pullback to an L1. We had the dirty one. S&P is still trying to climb the mountain on the way up to 17. Get that nice dive down into the 90 quarters. That's the zone of interest right now for the NASDAQ. And I would love to see it happen on a quick flush. Those are the best because they'll go down, they'll to the tick on the L1 and then go screaming back to the upside. So I'm still very much finger on the trigger waiting on the NASDAQ for a quick little flush back. Speak of the devil. I prefer the flashback moves to happen on like one bar with a big wick, but Nice dive back down into support. Buyer's not quite getting the bounce that I was looking for there. I'll ease off the gas pedal a little bit and see if they can flush a bit lower towards the bottom. Yep. This is still a really nice zone of interest. It's like a micro 3-press wedge that just attempted to break the lows. And now has completely failed. All right. L1's still keeping it going. Nice little retest for a refill. How kind of them. Holy cow, today's been hard. Yeah, today's been rough. I feel like lately we'd almost be better served coming into the trade from like 6 p.m. from 6 to 8. It's like it seems like that's where all the volatility is. Retested the lows on L1. There's that big wick. Now, if it is the buyers who absorb that move, this should follow through with another few pretty decent bull bars. And here it sits. Bottom of the L1 still acting as support so far. With like a micro triple bottom now. First objective, I would still like to see, maybe not necessarily the high closes, but there's a huge volume note at 2/4. Probably going to be better served to still target around the 800 halves than ahead of the volume. Then we'll see if we can get that breakout above the top. There's the retest. Now remember, this is the earlier zone that sellers were trying to defend. They were proven wrong initially, at least. So this 87 area is very interesting. Nice big bull bar off the 87 area. allowing the earlier sellers out at break even on this dive lower. And this is also a retest of this significantly larger L2. Big flush underneath the lows. This is allowing the earlier sellers who are trying to get that rotation to go out. A strong bull barred low is a potential really bad, big problem for shorts. Price is still back above settlement. We know how the NASDAQ operates. They love this vindictive BS kind of stuff. You can either let them do it, or you can just accept the loss with a smaller stop and just deal with it. Ooh, okay. Very nice bull bar back to the upside. Now, the response to this is going to be very important. We also have almost that vindictive break even on the S&P. They got close. Didn't quite hit it. The break even's 10.5, and believe you me, they will hit it. If they're hunting for a break even, there's nothing going to stop them. Back down to settlement. S&P, one tick. There, they got it. Was it in Hearthstone? Job done. Bottom of the L2 is a little bit further down. The voice reminds me of Warcraft Peon, yeah. I wonder if it was the same voice actor. I'm sure they recycle people, right? Quick flush back to the downside. It's a nice little pop back up again to reduce just a bit. But primarily because I want to drive my average down more than anything else. I would rather accept the loss now to put myself in a much more probabilistic area, is effectively the way that I'm approaching the NASDAQ right now. Still haven't gotten my average to where I want it. I would like it to be a little bit lower now. This is looking more like an L4 continuation back up, which means that the trend buyers have completely failed. So you can see what I'm trying to do. I'm trying to drive my average back down into an L4 rather than being up here in the L1, L2s. The objective is still a rotation back to the highs. I still think the buyers have more than enough opportunity to try to get that job done. As long as we're still maintaining above this volume. Potential profit taking on the way up hit a... There was that giant note of sellers right there. They built a secondary platform and then drove back down. So if the buyers are going to reverse today, they're going to need to break back above these 85s. Nice bear bar back to the downside. S&P is attempting to chop around this break-even point, but it still hasn't done anything to invalidate anything for the two-leg move back up towards 17. A strong bear bar back down here on the NASDAQ faster, on the 500 tick at least. We'll see scalpers trying to push back down. They've got support in the way at 64. The VVP is a little bit below that at 61.5, 61.25-ish. Nothing else is really moving. Crude oil is still trying to get that now two-legged move to the upside, and that would be a two-legged continuation to the top of the range. So I would put resistance at 61.36. So from a range fade swing short perspective, which is probably going to have to be overnight, would look something along the lines of that, where you've got this move up, the outside deviation up, realistically shouldn't break back above 62.11 if it's going to maintain that as a stop zone. And the downside objective would be a 2-to-1 based off of that risk. So the next thing that you'd have to ensure, if you were approaching it just blindly, would be making sure that you've got room for a 2-to-1, which it does. Way more than enough room. 2-to-1's actually just back to the inside of the previous range. So crude on the swing perspective. No. 2-to-1, please. There we go. Not really anything else. I mean, gold's kind of hovering around the lows back in the L2s. I would rather be a buyer down here, though. So from a swing perspective, 17.29. Probably wouldn't want to see it break the lows underneath 20.5. So the next important thing is ensuring that there's enough room for it, which there should be. Oof. Okay, so there's not quite enough room to the top of that spike. This has to be a modified entry. The only way to make that viable would be further down. That way it gets the target in the right spot. So 28.3-ish on gold. That fits the 2-to-1 with appropriate risk parameters, at least. That's really about it, though. And even that. Volume node is just a little bit lower. You can see that VVP just resting there at 61. Also that giant one down at 46, but man, I can't get a fill on the bid to save my life. The S&P did close underneath the entry point, so that's a big clue. Now we need to see how they follow through. And we've already had the larger objective, so I'm not interested if it breaks through the low. Trying to draw my average down a little further here. I'd like to see them down in the 55s, though. I'm not looking to do too much. Oh, jeez. Asking you shall receive, huh? Holy crap. Golly. The speed that this thing moves is incredible. S&P's challenging the low. It's one tick from the stop. So be it. That's the final one. Tried getting it to rotate back up for the 2-to-1, but they didn't want to carry it through. There we go. All right. So effectively eating the loss of the first long and looking for a continuation now off of a deep L5 reversal back to the upside, with the assumption that we still have a very strong bull trend on the bigger picture. So in this case, the probability is obviously still fairly low, just like it has been the whole way. But the upside objective is to at least get back to an inside L3. And the only reason I say an inside L3 this time around is because of the way that this moved down. When they first chopped through the L1, we saw some support, right? There were buyers there. But then when it went to the L2, nobody showed up to the party. And the ones that did quickly got out. Went down L3, buyers found a little bit, but just enough to get steamrolled over. It allowed them out at break even. Buyers who bought L3, they were allowed out at break even. L4 buyers tried getting it going, and they are just now getting pushed through. Usually the first response is to challenge back up into the L4 to L3 zone if buyers feel like they're in the really big kind of back foot area. And if they don't feel like that, we'll see it cut back through, start showing indecision in the L3s, and then continue back up towards the L2s or so. But the first problem zone that we're going to have to deal with at the moment is L3, which is a little bit further up, around like 70, 75 or so. So far, we've only had 2 pulses down, and it hasn't really shown any signs of stopping, which is why I'm still continuing to reduce on these lower highs. And I will still look, as long as they're holding above the lows, buying into the lows and drawing my average a little bit further down. But I'm okay where it is right now. I like this zone. They haven't failed below the lows yet, but man, they're getting close. NASDAQ on the daily, or at least the volume from the daily perspective on that major rally to the upside, puts it at 32-ish. That's that POC, the major POC. But aside from that, I'm just going to have to eat the NASDAQ, aren't I? Yeah. They've broken through the lows. This is their last chance to try to carry it back up. But from here, this is just a straight punch in the teeth. $731. Now, I'm not opposed to the 731 area, but keep in mind that this zone at around the 32s has to demonstrate support. And we're probably not going to see that support show up until like the end of the day, because recently that's what's been happening. If you look at a lot of these rallies, they're like, this is one of the only ones that actually took place at a reasonable hour. The rest of them all took place way later in the day, in the afternoon session, etc. So we're hovering around the 32 area. As far as anything else from the nearer term, that major cluster volume is going to be at 84.75. Now I'm curious though, if we draw this forward, 785 or so. So in the short-term swing higher, shorts have built in an average at around 785 with 3 lower highs. If they get failed and dumpstered on, it would be off of these buyers at 732 to kick the market back up. But if these buyers at the 32s fail, then realistically, there's not much left holding the market up. And there's no reason anymore for me to want to be long or stay long if it starts breaking below that. Because the next stop isn't until 683, maybe. It could be potentially down to the 655s. So that's another... I mean, from where it is now, like 0.6% move lower, which is definitely feasible for the NASDAQ. So you can see why. If it starts breaking through these 32s, I lose a lot of interest really quickly. Okay, well, I didn't necessarily want to delete all of them. Okay. Looking at the Asian session, the other consideration is that we have finally deviated beyond that by about a half. Ooh. So this is the first time that we've actually gotten out of the European or Asian session by really any amount. Falling resistance across the highs potentially creates the lows of the channel, which is where we're finding the support, but it missed that one by a little bit. I think more than anything else, it came off the ETH lows. And if they're going to hunt for support lower, that would be the next stop. More continuation up. If we look at this move down in context, we want to see where the volume is. Really? They built the POC at 60. Okay, at 68. So we've got a high volume node sitting at around the 60s, which would be a logical point for a lot of traders to be exiting. I don't want to get rid of too many. I still want to maintain my long position, but I'm going off of the assumption that the NASDAQ has had such a strong leg down that it's not going to V-bottom like I was expecting it to do the first time around, which probably means it will. But I'm expecting it to probably play off of this 3750 area a couple times. So I'm looking at this area as buying, taking some profit off, buying a little more, taking some profit off, trying to hold a net long position for the inevitable move higher, but you know, just in case it doesn't happen, I don't want to get rid of my entire position. Retesting settlement. A lot of volume coming in around the 64.75s or so. The upside objective, I mean, obviously we've got some falling resistance and you know, there's a few things in the way that are very obvious. But in terms of like the bigger picture ones, realistically, the objective is they held that 732 phenomenally well. So now what I need them to do is go back up, get through settlement, challenge the 785 volume, which, let's be real, we'll probably do some BS like this. Get another move up, challenge the highs. We'll probably see more resistance there. That was the 3 lower highs. That might even create something along the lines of a short-term peak for a bit until we get a volume dip back to 785 for continuation. So, you know, am I early to the party? Yeah. I'm very early to the party. But sometimes if you want the good seats... These seats cost me a heck of a lot on the way down, but let's see if they were worth the wait, I guess. Upside objective is a significantly larger rotation up, though. Still no shift in volume. Beginning to see some signs of accumulation, though. We saw the initial volume drop. It didn't really even drop much, I guess, but now they're trying to kick it up a notch. It would make sense why. POC shifted down at 66.50. The market's responding bullish to it. Oh, shifted again. This POC's jumping all over the place up here. These might be shorts feeling like they're stuck. Is it squeeze time? Another relentless V bottom. They are still demonstrating short-term signs of accumulation volume for an attempted pushback. So there are some definite concerns for that a pullback will happen sooner than later. Not yet, I guess. And here it sits. Not really much going on. Everything's pretty quiet now. Did they finally shake everybody out? They've taken the market's taken enough money. They're able to go now. See, by the time we got to the party, you drank all the punch. Oh, that punch was expensive on the way down, so I'm still trying to refill the bowl from the first time around. But this has some serious upside potential, which is obviously what I'm a big fan of right now. In the short term, a lot of tight stop trailers are going to be trailing up along with this move. 1 candle trails, 2 candle trails. They're going to be hovering really close because the initial move they're not going to want to give back. That'll usually lead to the wider, two-legged correction or something like that. But if we look at the 500 tick, I mean, they've barely even put any bear bars in this. There's not even been a refined swing high. Logical zone of interest for an objective up here. I'll peel one off. See if they want to pull back a little bit further. Unfortunately, buying anything above the bottom now, it means that it's going to do harm to my average. So that's a little bit of a bummer. But the market's far enough away where hopefully that harm won't do too much. Big pullback. Buyers want to see L1s, L2s, etc. continue. I know we're getting later in the afternoon, but it's continuing to move. Afternoon. It's afternoon to the day traders side of things, I guess. So feel free to get the questions in. I mean, I'll still cover those. I'm still watching this, and everything's still moving pretty nicely. A few obvious zones of interest if the market is going to pull back. That's going to be down here in the 760s. We also have a very obvious void, which is resting in the 755s. And another, which is resting in the 50s. Sometimes the market loves doing these quick little whams, and then they're done, right? So the obvious concern is that this is still a bear trending market. It's still making lower lows, lower highs. Yes, we've got some incredible moves off the bottom, but they haven't been able to really procure higher highs or a trend shift or anything. So there are some still, definitive concerns, which is why I'm still peeling a couple off on the way up. I want to stay net long, but we still have to be, cognizant of what's going on here. And what I don't want to see would be a POC shift, because then we have accumulation again. You can see they're trying. Unless the POC shifts and volume stays above it, then it's okay. This is where the aggressive trailers will start getting taken out. Really tight stops because they don't want it to pull back too far. The S&P can come underneath the previous bull bar. That would be a really nice spot for buyers to try to scalp back up again. Although we are getting, it's almost 11 o'clock already. God. All right, well, let's do final call for questions and we'll wrap it up. I didn't realize how late it was already. I mean, it went by quick this time. They're starting to churn back through settlement. Now they've got to get back through that 785 volume. They can get through the 785 volume, then, we see more to the party. But for right now, it's likely going to start consolidating unless it breaks out again. We're seeing the POC shift. Now look, right? POC shifted up, volume's trying to stay underneath it. This is a zone where buyers are taking profit. Earlier longs who are potentially stuck, they're getting out at break even or more. Shorts who missed the move down, they're trying to reload for another move down. So, I mean, you can see that's why I'm exiting some up here. It makes sense for the market to pull back from this point. All right. Well, I'm not seeing any other questions, so that's going to do it. I know it was a little bit of a quicker training session. Today's been all kinds of a mess. Woke up late and just one of those days. So I'm gonna sit and stare at a wall for a minute and rebalance, I think. Either way, though, the goal for this long, we've already talked about it, but just so that I'm on kind of the same page with everyone else, I'm looking for a continuation to the upside with the sense that we've held response at 732, that major volume node. That massive bounce off that 732 volume node, we shouldn't come back. This should be a V bottom if the buyers are going to hold it. But in order for that to happen, we've got to get through 85. We've got to get through value highs. We've got to get through a lot of stuff first. So the fight is definitely not over yet. But that's the goal. We'll see what they're able to do going into lunchtime. But outside of that, I hope you had a great day of trading. I know I got my teeth kicked in a little bit on that first pullback, but trying to get those seats early, you know, those seats are expensive sometimes. Let's see if we can ride this thing back up to the highs and carry this thing on until tomorrow. Maybe we'll still be long tomorrow. That'd be nice. Hold on to one of these swings for the amount of time that I would actually like to. Either way, I hope you had a great one. Enjoy, rest up, and we will see you all tomorrow morning, right? Have a good one. We'll talk to y'all later. Thanks.